on society. IBM has shown the path less traveled. IBM has come up with innovative ways to work with clean tech startup groups. They view these startup groups as solutions to their customers' problems. These groups not only are viewed from a solution standpoint, but they don't view it from a financial standpoint. Case being, IBM works with them to figure out how the customers work and which way to best do it. Our guest today is Claudia Munce. She's the managing director at IBM Venture Capital Group. The Venture Capital Group builds strategic relationships with venture capital firms and their portfolio companies in order to foster innovation, solutions, and technology developments. Hi, my name is Dale Robertson. I'm the managing manager here at Georgia Tech. Our sponsor for this afternoon is the Institute of Leadership and Entrepreneurship. Our media partner is WABE 90.1 FM. Video recording is done by Georgia Tech Library, ePage at Services, at Tech Services. Our guest today was born in Taiwan, raised in Brazil, and moved to the United States to continue her graduate studies at Santa Clara University as well as Stanford University. She has been with IBM since 1985. Please give a warm Georgia Tech welcome to our guest today, Claudia Fan Munce.
Well, you got your homework. I was hoping that I get to keep the mystery, but you did such a good job. Good afternoon. Thanks for inviting me here. I'm delighted to have this opportunity to give you a little bit background about what IBM is doing in this space, but primarily to really be here for you to answer whatever question you find interesting. That hopefully I will give you some context that you will find something that will be interesting to you, answering questions that will help you in any way of thinking about working for a large corporation, which a little earlier today I had a meeting and was told by my delight that many of you actually think about working for a large corporation as a great option after graduation, which is, I came from California and the land of La La Land of VC and startup company, and that kind of spirit does not come through very easily. Everybody wants to start their own eBay and Yahoo and Google. That's where I come from. And the fact that you are inviting me and see large corporations as a potential place for your career development is actually delightful to me. So I'm going to tell you a little bit as well. I won't tell you my age, although it's already below, but this is actually my quarter century here with IBM. It's been a long haul. It's been a wonderful journey coming from, straight out of school into that large corporation of 400,000 people to a quarter century later and still being there, but doing many different jobs in between. So if you look at the title of my slide here, just about innovation. At this point, in China where we are today, I'm sure that word is almost a little oversaturated, right? We hear about innovation all aspects. You go to Disneyland and you see innovation, and you go to bus stop and you see innovation. You see that around the world. So I'm sure there is some level of saturation of people talking about innovation, people who want to describe what that means to you. I'm going to give you my angle of that. So, of course, I'm going to use that word. If you think you're saturated, just wait until I'm done with you. The innovation aspect is very important for a large corporation, just because it's an environment where the company, there you go, a company the size of IBM still need that component of it. If you look at where we are today, if you look at how IBM as a corporation is organized, there's a three-legged stool that needs to be standing at all times for anything to happen within a large corporation. We got our brands, we got our industry, we got our geography. Anything that IBM do is within those three axes. There's a massive matrix system at work. There's not a single point of contact where you can say, oh, this is where I do the business with. Not inside IBM, because you have to cross our layer, if you look at the industry sector, we have general managers that manage that. If you look at our major business units, we got other general managers to manage that. So for you to come out of that maze and really apply anything new, you got to move this whole matrix with you. There's a corporation that has to drag in about $106 billion a year from the street, corporately. I mean, this is a huge challenge, particularly in the times that we're in right now. I mean, the IT spending reducing, the customer doing displacement. But yet, if you look at our business, these are the people that have to put the stuff on the truck. And of course, Jimmy Rometti, our fearless cell leader, have to then offload the truck into a real revenue opportunity. 103 total, of course, the other $3 billion a year from our financing and other aspects of business that we do. So just to show you a picture of the complexity, I took one of that business units, our software group, which is headed by Steve Mills, and I gave you sort of a top-level view of the portfolio, the IT portfolio of products and services within that one business unit. And these, as all of you know, these are in the engineering and the IT industry. Each of these are huge buckets, right? Within these system management, there's a huge portfolio of products and services that being offered. So the complexity about what to do in our own product and service portfolio is very, very complex. And of course, not to mention gearing to our 85% margin. That's another huge challenge with the cost and of doing business globally today. But the innovation, as I started this conversation, is very key to drive all that. Just because each and every day that portfolio is changing. Customers are demanding things that we don't have. Or customers are objecting things that we already have installed. There is product coming off portfolio every single day, and there's product being added to that portfolio every single day. And yet, by the time you get to the stream level, you still have to have that entire solution portfolio to serve the marketplace. So you have to respond, you have to integrate, and you have to differentiate. Differentiation is really the most key factor of what we call innovation. You can do a lot of things in the climate that we're here today. You can optimize your business. You can lay off people. You can increase productivity. But the ultimate innovation is about how you differentiate, how you walk in that room with the customer and being able to help him or her differentiate the business that they're in the eyes of their own customer. And IBM Venture Capital Group and the IBM Corporation look at that differentiation as a portfolio of activities that we have to conduct any given day. And this is my little slice of the world. You can tell that we have a lot of products in place, we have a lot of experimentation in place. This gets pretty low when I turn my head. And then of course, the venture-backed company, both in terms of the late-stage company and early-stage company, as well as the C startup company, as they introduced me earlier, is really the core of what I'm responsible for. So if you look at Michael Young City from Harvard Business School wrote this book just about the same time we started our activity. So give you sort of a process view here. You know, when you look at the customer play, if you look at the marketplace, you try to identify where the gaps and the white spaces of your current portfolio, of your current solution stack, and where can you find this component. And you look internally, of course, through your own technology and solution portfolio. You look at what your partner has, you look at what your research portfolio has, and when you don't find that is when you start calling the innovation sourcing. You go and find somewhere else. Somewhere else can be university, somewhere else can be other research laboratory, but certainly one of the very key ecosystem of innovations that pump out new technologies that are differentiating every day is the venture capital community. Now let me just give you a little bit of view. Are you guys familiar with the venture capital community much at all? Here? No? You know, the venture capital is a financial instrument that has really been behind the forces of much of the economic growth that we've been seeing. I gave you some data here where you see the revenue base of the companies that were once or today in the U.S. that are backed by venture capitalists. Not too shabby, 2.9 trillion by 2006. Total percentage of U.S. GDP, 20%. And even in 2006 to 2008, you can tell the growth of venture-backed versus the total U.S. growth is to outpace. So it's a very significant instrument that has really brought much of the IT growth in the last decade or so, even though the industry itself has been around for a long time. Of course, I'm showing you 2006 to 2008 because we all know what happened after 2008. So let's not share the bad news. The VC industry, obviously, by the year, it started way back. In the 1960s, there were people calling themselves VCs. There were people starting brand new companies that were backed by a few, investors and friends and family and very wealthy individuals that started this whole industry that is called venture capital. And that industry has evolved along the way, along with the private equity and other financial industry. But it started to peak close to year 2000. Year 2000, over $100 billion was invested by venture capitalists around the world. Literally, this is where we call the bubble, right? I mean, we used to say at that point that, heck, if you walk down the hall, you're funded. They really don't care, because this whole idea of future revenue has driven this industry to a hype that everybody was drinking the Kool-Aid every day. Everybody thought, I can get my money in and out in no time at all, so why should I care? So when you hit $100 billion in 2000 is when IBM decided that we are going to have a programmatic approach to work with the venture capitalists for the mission of finding IT technology companies that can serve our customers. I tell you, the timing couldn't be worse. Because if you're a venture capitalist in the year 2000, and people are hitting your door day in, day out, wanting you to take their money, and somebody's coming in like IBM who has an incredible balance sheet and say, no, I'm not here to give you my money. I'm here to try to learn what kind of technology companies that you're investing that can help my customer do their business. We used to say, me and my partners are in that group earlier, that there were really good meetings when they throw out a business call after the meeting and not during. It really was a very difficult conversation when you don't couple yourself with enough money in the room. That was just the way it worked. Every corporation that came in to the game at that point in time brought with them huge funds, capital that they can syndicate with the venture capitalists. Or they walk in and you pretty much give them a Chinese menu of all the companies that you have invested and say, okay, buy whatever you want to buy from us, right? I mean, your merger and acquisition is an exit from my portfolio company. Here they are. Which one do you want? A wonton soup plus chicken salad. You're done. It is a very, very difficult conversation to come in and say, no, we want these companies that actually fit strategically to these market gaps and white spaces that we're seeing. We want them to be on the right platform. We want them to be Linux-based. We want them to leverage the open source. We want them to have the service component on top. We're taking too much of my time. This is not necessary for me to get the IRR from my investor. If I can just go to the IPO market with the future revenue projection and get type of the valuations that the venture-backed company were getting in the year 1999, 2000, why should I waste my time? There's a much better way to spend the time. So coming to this point, having that conversation, in terms of really leveraging the venture-backed company into the IBM innovation ecosystem, really did not start to take off until, of course, the macroeconomic change, right? It took about 2 companies IPO to bring on the bubble. It took about 2 companies, unsuccessful exit, to burst the bubble. So when the bubble burst in 2000, it really started at the end of 2000, went all the way to 2002 to show the whole gravity of that. the fact that there is a potential strategic partner like IBM, who, by the way, has real revenues, that is no longer the future revenue that you have to lean on to build a successful company, become a much more relevant conversation. So from there, the gold rush. From there, we started to really work very closely, and I'll show you some statistics later about the relationship and the success that we have with that community. But if you look at just today's data, back in 1998, this was before the bubble burst, you can bring a company, and in 4.5 years, this company will exit into the capital market. And if you're just looking for M&A, which is normally a little lower return, all you have to do is hold a company 3 years. It's basically, how many things can be done in 3 years? Really a very, very short development cycle before the company can recognize its financial value. And that was like drugs. That was so attractive to everyone. It's for the entrepreneur that says, wait a minute, I got this great idea, and you're telling me that I don't have to fully prove my idea for you to really want to pay real dollar, for the investors to want to pay me big bucks so I can have a successful IPO in NASDAQ. That was really what was happening in 1998 versus today, you're looking at a venture capital as a much longer cycle of development, a much longer cycle of testing the market, testing with the customers, and much shorter success of going to the public market. 2008 was an unmentionable year for the venture capital industry. The IPO basically hit all-time low compared to the history of the venture capital industry from the 1960s. M&A took over some of that, but you have to realize in here are what we call the fire sale, the liquidations, the rolling up, the consolidation, all the above that are not necessarily a profitable exit for the VCs. But one thing that has never changed, and that's why we're still here with all the downturns that you saw in this industry, is that's what we do. The venture capital, by definition, is an industry that invests in differentiation. Even in year 2000, we used to say there's so much dumb money around. Remember that was the $100 billion investment, that was when people walked down the hall and got funded for whatever idea they had in their head. Even in that point, the whole idea was about differentiation. The whole idea is about not taking on anything that is evolutionary. A mere 2x, 3x on performance, on price, on whatever, it is not going to get funded even by the dumbest money in the industry. So the differentiation aspect of the venture capital investing, migrating from the focus of investment in 1998 to today, which you saw a lot of energy, you saw the biotech, and certainly the medical devices and others, are still what is driving the IT market, are still the differentiations that the customers are asking for. From every industry, core banking, every aspect of the financial institution are now leaning on the IT. Every aspect of the healthcare, every aspect of retail, all this massive amount of transformation in the IT industry are focusing on what are the new use of my IT infrastructure that can help me do my business better. So this group, backing up, was then formed in the year 2000. Again, we wanted to know why they're investing where they're investing. Why is it that the investments are drawing billions of dollars? And you saw in my bio, I spent many, many years in IBM Research. So we're not necessarily somebody who do not have a lot of technology in our own pipeline. But we look at our $6 billion a year investment versus a $100 billion investment, thinking, wait a minute, why is so much money pouring into these spaces? believe it or not, it wasn't that long ago. As a matter of fact, the year was 2002, that the wireless network was the huge investment focus. You think wireless? What is wrong with wireless? Well, maybe not you. It's my daughter back there, maybe. But it really is a new phenomenon. I won't tell you the punching card part, but the wireless investment in your notebook computer really just happened. I mean, the year 2011 BAG, that was 10 years in the standard formulation, they really took off of that technology. So you have wireless in cell phone, wireless in, in your personal devices, in your notebook devices, all these hubs. That investment actually just happened in 2002. In 2002, draw several $billion computing technology to see which one would be the best antenna, which one would be the smallest scale, which one would be the lowest power consumption. Every aspect of wireless was being invested by VC, and that's how we pushed that industry forward in such an accelerated way. So we want to know where they invested. We want them to build on things that our customer can use. So it's an ecosystem for us. We want them to give us the competitive edge. We want them to give our customer the competitive edge. We want them to walk in the room and say, you know what, you are Bank of America. You can provide this function to your customers that your competitor can, therefore giving you the competitive edge in your industry. We wanted those unique solutions, these bleeding edge venture capital companies can bring that kind of solution to us. We used to call ourselves the arm dealer for them. They fight the battle and we supply the engine for it. I mean, we're in the big mainframe, everybody know that. Big software license, everybody know that. But what is that unique little component that our customer can have that will make their business more competitive was not our game. Because we're into scale. We're into bring things that are horizontally enabled so you can then build differentiation on top of that. So with that strategy in place, we went and developed a strategy of how we're going to get the venture capital companies, we're still talking, to really want to work with a large corporation. There was clearly a DNA incompatibility between the two of us, right? There's a self-selection process from which if you want to be a startup entrepreneur, being an IBM was not really that high on your list, right? There was Exeter, there was all kind of innovative companies that the young entrepreneurs seek out as potential partners, right? They're hip, they came from university, the CEO wears shorts, and flip-flops, and there was all kind of cultural incompatibility in the minds of entrepreneurs about working strategically with large corporations such as IBM. So how do you bring that together? How do you go out to that culturally differentiated crowd and trying to get them to understand the value of working with a new strategic partner such as IBM? So we developed, as in any relationship in your life, what we call the win-win value proposition. We developed what we felt they can become more successful by what we can provide. At the same time, while we can become more successful by leveraging the benefit of their innovation. So this thing was generated, as a way to articulate, and really, if you're in technology, in your business, and you're inspired to be an entrepreneur, that is the first thing you got to do. You got to convince people that they got something to gain by what you're trying to get them to do with you. This something about me have never got anybody a dime out of any industry. So if you're going to sit down with an investor, you're going to sit down with a strategic partner, you're going to sit down with a customer, the first thing you have to be able to articulate is, what do you get out of that? Not what I get out. I know what I get out of it. I got $106 billion revenue, counting on that. But what do you get out of it? What kind of benefit do you get out of it? So having VC and VC-backed startup company as a client, we have to formulate that same kind of business value proposition. So obviously we're opening up, incredible amount of IBM's ecosystem, our channel, our partners, our own sales force, our presence in 173 countries from around the world, giving them, what we thought was the potential market development opportunities that they can fine-tune their business plan or develop their new business plan from an investment perspective, get them to actually become an acquisition candidate of IBM, as I said. Exit is very important to a venture-backed company. Venture is a very different kind of instrument. Nobody is in venture capital investing for a lifestyle company. Right? You might find a really nice niche from a great company around there, the bakery around the corner, everybody goes to, you're in line, make a huge killing every month. The owner will, you don't want your money in there. That is not a venture investing company. If you don't have the hockey stick growth, they don't put money in you. If you don't scale to the levels that they are seeking return, they don't put money. It doesn't matter you have a great idea. You got to understand why they invest. So we wanted to give them many different potential values that they see as a way for that partnership to continue, as a way for them to open up their portfolio and give us access to their startup companies. And of course, IBM giving the expertise, the infrastructure, our go-to-market activity, our IP portfolio. If you look at the web, you'll see me saying, 2006, I announced all startup, age 0 to 3, under $10 million revenue, free licensing for all startup companies. My colleague in IBM didn't like that at all. The little thing though is, once you cross that $10 million, I'm going to start collecting because I want to share your success. And that is the win-win. And the startup who has to pass the hurdle of becoming a successful company is actually a great benefit because we are betting on that success. We are investing alongside success. I was just telling Daryl, I just got back from Bangalore about 24 hours ago, and I announced a global entrepreneur program in Bangalore, but it was covered here in New York Times and Wall Street Journal. Same thing. IBM provides free software, free technical assistance, free go-to-market support for entrepreneurs that can fulfill our market gap, that can fulfill our portfolio. So if we see you as something that can enhance our position in our customer base, we want to invest in you. I may not give you direct investment. VC actually love that because direct investment is what they are here for. Because they're sitting still today with tremendous overhang, because of the fear to invest, and of course because the pipeline for early stage investing is drying out. So they say, if you can help validate a company, I'll do the capital investment. You, IBM, take your 400,000 people and go take this particular company to the marketplace. And that has been a winning formula for us both. So this is my pitch to the small company that I start talking about that. If they see us coming in the door, these are the values that they want to seek from IBM. If you talk about large enterprise customer, which it is indeed our bread and butter. I mean, small and medium business is probably one of the most relevant sector for the economic growth. But we at IBM know very well who we are. We serve the large enterprises. We're the large bank, the large insurance company. We don't do the Facebook, I'm sorry. We don't do, the hot and hip small companies that are coming out of the pie. But you wouldn't know that every single day of your life, there's at least 10 transactions that are being processed by a huge, uncool mainframe in the back room somewhere. So that infrastructure relevance is definitely still there, and the startups start to recognize that in order for you to really gain access to the customer base, you need to understand how your stuff works, with what is in the back room driving the engine itself. And of course, when we provide the end-to-end technology to improve our customer business, that is credibility to a startup company, that is direct real revenue, not future revenue like during the bubble, so the startup company can claim that, of course, can enhance their chances of becoming a successful company, the stock in the capital market or through merger and acquisition. So here's where we came all the way from that year 2000. In the middle of that insane bubble, we came in with that value proposition. We found at that point, in the entire IBM world, there was 21 startup companies that were considered IBM partners. Today, we have 1,573. Every time there's one more, I get an email, so I'm counting them one by one. 316 of them are generating direct revenue in a specific industry. 131 of them has become a cross-industry revenue partner. Partners are generating billions of dollars of revenue with IBM. And these are the companies that we acquire. So we did come through with our promise. And today, the #1 acquirer of venture-backed company. You can tell we were kind of slow, but then the acceleration pace is very fast. So I just want to close and let you ask me a question, but I don't want to close without telling you a little bit about what we're looking for. And I don't know what stage you are, if you have an idea in your head. In terms of the company, the startup companies that we, IBM, are looking for in a very, very broad stroke. I don't know if you heard or saw the commercial on TV when IBM started the Smarter Planet strategy way back in 2006. Remember On-Demand? Do you guys remember On-Demand? That was our last one. You know, it's like everything is, real time, utility based. And the Smarter Planet strategy actually is the overarching strategies that we see as an opportunity to develop new technology, new business for the IT marketplace. And it comes down to 3 simple words. It's the instrumented, interconnected, and intelligent. With the massive amount of instrumentation, with 2 billion RFID produced each year, with everybody being connected to everything. I was just with the CIO of Barclays, the largest telecom in India. We have 20 million users signing up each day for new wireless services. I keep rechecking that number because it just seems surreal to me. And about intelligence, now that you have all that metering, all that sensor around you, all that data, primarily from you guys, right? I mean, you're blogging, and you're tweeting, you're putting stuff on Facebook that I wouldn't tell my college best friend. The level of data that is available today that the business can use to really further what they want out of their end consumer, out of their end customer, is incredible. You literally are living in an environment today where you might be the dumbest thing in the whole environment. You might not know where you are when you're lost, but your GPS device does. So aspect of really taking all that data and serving the customer and create economic value is a huge, huge IT opportunity. And it's just unfolding because the customers are looking at the data and say, wow, so I have all these internal data. The traditional, you go to Safeway, you become a member, so they now have a data about how many, milk, how much milk you buy each week versus, I don't know if you guys follow that, but it was about 20 years ago when that whole thing first started, they'd have you sign up, everything, become a member, and they were collecting data on every purchase behavior. A lot of the first data that came out, when you walk into a grocery store to buy formula, they buy beer. So someone will know what drives the new daddy. Intelligence. Now, how you used to use it, well, the business out there marketing to new daddies know how to use that information. Universities government, commercial institutions are now looking at this massive amount of instrumented, interconnected worlds are generating massive amount of data as the ultimate opportunity to really transform the ways that their relationship are with their customers. And that is the opportunity. If you can think about data that you have today, I'm scared, but that's because I'm from an older generation. But you can think about new ways that you can deal with people, deal with business, deal with your environment, deal with your dog. Every aspect of it today is giving you, without you having to be that much smarter, data that will make you that much smarter. It's just there. And because it's there, you represent a tremendous economic value that you can tap in as leaders and as entrepreneurs. So I'm going to stop here because I really just intended to give you a very broad view of what we're trying to do. I mean, we are certainly not the innovation engine for IBM, but we're one part of that. And of course, the faculties and also told me that it's fascinating for you guys to just understand why would anybody stay with one corporation for 25 years? Why am I not bored to my tears after all these years? Or anything. I mean, particularly I'm so schizophrenic that way, right? I live in Silicon Valley, I deal with VC, which is the ultimate channel to this very entrepreneurial culture in the startup community, and yet I sit back in Armonk in a year. Actually, I'm the only corporate vice president outside Armonk, but that's because I hired it. But how do you match the knowledge of those two cultures and make them actually want to talk to one another? That is my challenge, but I really would love to see, what do you have in mind that I can help, provide my own perspective on. Hold on, let me just give them this. Yeah. If you want to know how to reach some of the things that I talk about, the free software, free sale, free marketing, this is where you go to. Of course, everybody wants to have a box. Go ahead, please.
Thank you.
Can you maybe give an example of a company that was venture-backed and directly met one of your customers' needs from beginning to end, or just a short anecdote to...
Sure. I'll give you one example that I actually just dealt with. We were in China, who was a little bit behind U.S. in the financial industry. They were still struggling with, how do you provide ATM services to their customer? How do you do transactional banking transactions when most people don't really have a very secure credit? Right? So everything is cash-based, everything has to be real time. So we really didn't have a solution. Our solution was very global. It worked very well with the American Express and the Bank of America of the world, and Merrill Lynch and the Goldman Sachs. But for that territory didn't work. So we went around, of course, it has to be a very localized technology, right, for serving the local. We found it's really a very, very small company. We had at that point about 6 people, and they were working on a mobile solution for payment. So we really brought them in, and we looked at the technology, it was really very raw. So we brought them into the IBM Research Division, and for the next year, we actually worked with them to develop that solution. They were backed by local venture capital, which, by the way, at that point was also very raw in terms of being able to do the due diligence to find great company. This company then was taken, after they improved their solution, taken to some of the small customers. And I can tell you that today, we make over $100 million revenue with IBM, which means we make $100 million revenue. I don't know how much they make, they won't tell me, but we make $100 million from them. By being able to provide their solution, adding our service revenue on top of that is a great success story for us.
I have a question over here.
I'm sorry? Yes.
Okay. Yeah. When IBM got into this particular business, a lot of companies got into the same business at the same time, and but most of them got out shortly after the bubble burst. And I guess I have a couple of questions.
Yes.
One, how do you explain your longevity of this business relative to the others that tried it and backed off pretty quickly?
Yes.
And secondly, does IBM put capital into this, or is it basically infrastructure, access to your clients, et cetera? Are you actually putting capital into these startup businesses as well?
Absolutely. It's a really good question because it comes out a lot. I mean, the corporate playing with the venture industry has been very cyclical. We came in, we left. When things got good, we came in. When things got bad, we left. And the reason for that is, by the most part, the corporation came in as a syndicated investor. They work with a lot of VCs to really make a lot of investment. And of course, the IRR of those investment was the corporate balance sheet gain for the corporation. When we came in, because we didn't have any money and we couldn't get a conversation going, I was telling you about all the business card being ripped apart and all that stuff. My CEO actually listened to all my whining and said, "You want cash? We got cash." This is the answer to your second question. So I became a fund investor. We pour a large amount of money into the venture funds. Now, these are your top venture firms as the investor. Because as an LP of a venture fund, we have direct access to the performance, the pipeline of investment opportunity, and of course the existing portfolio. So we did that. But our mission from day one, that is the answer to your first question, has never changed. It has always been about my last couple of charts, always about how many startup companies now help us do business in the marketplace. How many startup company now has been acquired and became a part of IBM portfolio? And because our mission has always been strategic, when our financial performance goes bad, and trust me, we weren't even smarter with our financial either, it didn't really eliminate the group as a whole, as it happened to many of the large corporations that was playing that game. You know, we basically weathered the financial downturn of our fund-to-fund investment, which, by the way, did not have as big a cyclicality as the direct investment strategies that Intel Capital and IBM was exerting. So, you know, stay very strategic to the core of your corporation, right? IBM is not an investor. You couldn't get me to manage my own investment portfolio. But we're an IT company. We're here to deliver IT solutions. So stay core to our business is all about. You know, is what sustains us. I mean, like I said, I'm a corporate vice president of strategy. Most of the corporations that are doing this are trying, and I hear the challenge all the time, are trying to get better linkage with the corporate to understand what exactly are the direction of the corporation was, you know, I get paid to do that.
Can you talk a little bit more about ecosystem, the concept of an ecosystem?
Okay. Well, the concept of ecosystem goes back, you know, in the natural world, and it was certainly deployed by Marco Yancidi in the Keystone strategy. You know, it really is the fact that there are interdependencies in the natural environment that we are living. You know, the fact that there are food chain, which everybody knows, there's all kind of micro-level interdependencies between species to make an environment healthy for all. It is the concept of ecosystem. So if you bring that into a more business location understanding, if you look at a company like IBM, ecosystem are people that are selling our product, our channel partner ecosystem of developers that are developing on top of our software. Ecosystem includes our customers that are obviously buying and using our product. Ecosystem includes universities that are developing skills that we can bring to our corporation and enhance our workforce and continue to drive our business. So ecosystem is basically a system of interdependent entities that as a whole become healthier when each and every entity is healthy. And that goes back a little bit to while I talk about developing that win-win value proposition. If all I want is, drain you, then I will be healthier, but for a very short period of time. Because pretty soon I have to find somebody else to drain. And it's not always that easy.
If I understood you correctly, you mentioned earlier that IBM Venture Capital Group had become a fund of funds.
Yes.
And I just want to ask a question about the geographic distribution of the funds you invested in.
Sure. The geographic distribution is clearly Silicon Valley first. We invested in many of the very well-established, good batting record funds in Silicon Valley. Silicon Valley was and still continue to be. I will even argue that the current downturn becoming even more so, the center of gravity for the venture investing. It's China, it's India, it's all these wonderful new hubs. But Silicon Valley, even last year, still drew over 50% of the total global investment. So first investment was focused in Silicon Valley, and then moved somewhat to Boston, yet another hub in the U.S. And of course, since 2004, the grid, the wheels fly, IBM's growth today comes from outside U.S. more than 50%. So it becomes really an emerging market strategy. A lot of the emerging market, not like China, which definitely has some level of saturation in terms of the capital injection, but a lot of the emerging market has actually no critical, mass of a venture investor. So they don't have the venture capital as a way to really create a lot of new business. So we made a lot of investment outside U.S. for that reason. So we have in Europe. We have definitely India and China. China was actually the very one exception that IBM had. In China, we actually formulated a direct investment fund because we really found the regional venture investors at that point. When we made that investment, it was prior to all the big global international venture funds entering China. We found that the local investors did not really understand the formula of venture investing. So aside from all the skill, go-to-market, platform, technology, infrastructure, we felt the capital was an instrument that was missing. So we did make a direct investment in China. Just so you don't go off and go, read that and say, no, she why? She said they don't invest in directly. In China, we did. We did okay with that.
Hi. I was curious as to, with such a large and a company with such a long history, how is the implementation of starting all of these venture capital department and as kind of a new entity as part of IBM?
Yes.
How is that implemented within the rest of the organization, and how did that kind of fit into the rest of what IBM does?
That's always a great question. The complexity of the matrix in IBM to navigate that through and get anything done really was a huge challenge for this group. So what I decided to do was actually to form a matrix group myself. So my partner, I have entities in 43 countries right now. My team around the world reporting to their country general manager, which means what they do is day in, day out, they're looking for opportunities that will make the country general manager much more successful. The person on my team that report into our software group, remember I gave you that three-legged stool thing? There's the group, the product and service group, there's the industry, healthcare, financial, manufacturing, retail, and then there's the geographies. So I spread my matrix team that way as well. So each and every one of them have a direct responsibility into the person that they report to. So basically we take that huge complex matrix and we brought it down into a microorganism of that same matrix. You sort of mimic that same thing. You say, well, wait a minute, I gotta get this industry leader to sign off. Who best to sign off on that than somebody that worked for him? But that aligned to me, of course. So I actually took it apart and become this matrix. Everybody's measurement is the same. Doesn't matter if they're in China, India, Vietnam, Cambodia. Everybody has the same kind of measurement, but they have to take that measurement and then tailor that to the local leader who they are responsible for. So I found that structurally that is how you make it work. Because if you're an isolated entity in a large matrix organization, you're going to be fighting with everybody, right? You're going to go around and spend your entire career just get everybody else to sign off. The best way you can do that is find a way to somehow make whatever you're trying to do their idea. And if you can do that, they don't even read, they just sign it. So if you have a really good technology, and it's from a startup company, and it's actually being previewed by the person on your team whose job responsibility is to make that general manager business better. If that person has done that level of due diligence as part of the venture team, that general manager will sign out on that dotted line. Does that answer your question?
All right, Claudia, well, thank you for your time today.
Thank you very much.